So let's talk about gold analysis for the fourth week of August. Now we are on the weekly time frame, and you can see that for the past 3 weeks, in fact 4 weeks, gold has been losing value. We've been experiencing lots of selling pressure, and I don't think it's over yet. So over this place, we have a fair value gap here. Very nice fair value gap on the weekly time frame, guys. This is a very large fair value gap, you can see, right? So we have a very high possibility that the market might want to tap into this fair value gap. But other than that, let's go over to the 4-hour time frame. Let me show you something. Now this is the 4-hour time frame. Now I'm expecting a break of structure on this level, but let's see how it goes. Now what I'm seeing on gold is that there should be a short-term rally, meaning that we're going to have some buying momentum coming in very soon. But in trading, you are expected to react, not to expect. Get that very, because if you are expecting the market to do something and the market does not do it, and you take a loss, in fact, it's more harmful to your psychology. You get what I'm saying? So now let me show you. I always have two gold charts here, so that in fact I can see from different perspective of how the market is going. So this is the other one I normally look at. Now both of them are the same. This is my main this thing. So for a very long period of time, gold has been respecting this trend line. Now there are double trend lines. One is for the body, one is for the wicks. Now you can see both of them here. Now presently I'm in a trade now for my second challenge for the funded account, and I think it should be in profit. Yes, the market just opened, so we experienced some little gap up somewhere around here. Alright, so now what are we seeing for this week for gold? Before I can really make a clear statement for the directional bias for gold, is that we should just pay out for two things. Now I'm going to show you two things I'm going to pay out for. One is a break of structure on the 4-hour time frame. Now that break of structure is what's going to signal to you that okay, yes, the market is changing. Because why? First of all, we've had a massive sell-off here, which took out all the liquidity from this level. All the buyers that bought at this level, all of them, they've been flushed out. Then we now created a higher low. Now in a downtrend, the market is supposed to be creating lower lows, but for the first time we created a higher low. So what I'm expecting, or what I'm going to be reacting to, is if we can get a 4-hour close above this BUS line. Now this is my line, I like to refer it as BUS, which is break of structure. Now the best confirmation is if we can break above this place, close above it on the 4-hour, and maybe close above this trend line. In fact, that would be just so perfect. Now that is just one. Let me show you the dollar index, DXY. Now if you look at the dollar index is looking weak. In fact, it's this trend, the buying pressure, buying momentum is weakening seriously. Now when you see now, but on the second note, you have to take note of this, because why? If you should draw a trend line here on this above side, then the previous highs is somewhere here. Alright, this was the previous high. So if the market should break above this level, that means we're going to experience serious buys for dollar index, and gold is going to fall down. Because why? Gold and dollar index, they are negatively correlated. If dollar goes up, gold goes down, and if gold goes up, dollar goes down. They don't agree and they don't move together. That's what it means. So before you should place any trade, wait for a clear break of structure, either below or above. Now if you are confused of how you find the most recent high, what I do, and this is the only reason why I use my RSI. I don't use RSI for divergence, for buying long. All those are basic or beginner level style of trading. What I use the RSI for is to identify the real or the proper swing highs and low. This is what I use RSI for. This allows me. So if I'm looking for a major swing low, I'm going to look for the lowest point on the RSI, and you can see the lowest point is here, which marks this point. So if the market can close below and break this level, that shows that okay, we are going to experience a reversal soon, and the market is changing direction. Then the next major level that the market could break, that will in fact we show that okay, dollar is going to lose serious value, is this next level here, because this is the next lowest point. So if the market could not reject above this level, in fact, just know, but the first major trigger is this level. This might be your line below. Alright, so for that, there's nothing really much for us to look at. Then just look at the weekly time frame to see what is there first. Okay, so on the weekly time frame, we still have a small distance to cover. Before, like my own strategy says that we must get a touch of this trend line. Yes, because why? That is a, if we should continue to sell dollar, we should at least touch this trend line before going down. Because why? That is a premium zone. As you understand, that is a premium zone to sell or short the dollar. This level here is halfway. So what you should do for gold is to scalp gold if you are going to take a buy trade, but never take a buy trade. And from what I'm seeing, when you never take a buy trade during that New York session, because why? New York session is where the most move happen for gold. That's in fact New York session is where the real trend gold happens. So now for my price target for gold this new week is, I'm expecting gold to take out these previous weekly lows. So all your trades should be scalping trades, but once you get to these weekly lows, stop. Once this weekly low have been taken out, stop taking sales and just hold on. Don't take a buy, just stop taking sales. Now if you want to look on the forward time frame for your price target, let me show you how you do it. So you will first wait for, make sure before you sell, make sure price is in the premium zone and respecting your trend lines. Now let me show you what I mean by premium zone. Now the Fibonacci number tool, what most traders, in fact we've been told that Fibonacci tool is like a magical number, blah blah blah, this kind of stuff. But from my experience and observation, I discovered that the Fibonacci tool is just a tool to measure premium and discount zone. So if I was looking to sell the gold, I'll wait for it to touch this trend line, at least let it break this 78.6 level, which is my 0.786 level, before I'm thinking of selling. Because why? You want to sell high and buy low, but since we're in a downtrend, we only want to take sales, and the best place to sell it is by selling it expensive, because that is how you make profits. You get what I'm saying? So then your price for your profit target, let me show you where your profit target will be, because gold is a very volatile asset. The best way to do it is to scalp it. Can take trades that will last maybe within kind of 2 hours, 3 hours, 4 hours at most, or maybe if it's in fact 4 to 8 hours at most. Those are my kind of intraday scalp trade, but you are only taking sales. So ignore all buy signals, because why? It's a trend following strategy. Now this is what I'm talking about. So this, from this place, the next target will be here, this one, and after this here. So this is how you want, because anytime it breaks in, takes out liquidity, it will trace back, gather some momentum again to fall downwards. That is how gold moves. Gold does not just move, in fact no pair move in a straight line. So this is the weekly liquidity I told you about, liquid low I told you about, that once it takes out this low, stop trading. Alright, so there's nothing more for me to share about in this video. If you love it, don't forget to hit the like button, subscribe. I'll catch you next one. Take care.